whoop.
All right, guys. Sorry we're a little bit late today. Had some technical difficulties, and Dane is running a little bit late with a contractor. But thank you so much, guys, for joining in. This is DeFi Crypto Alliance Show, where we're trying to do our best to bring real estate entrepreneurs and the crypto world together. Where we're going to use crypto as a wealth creation tool and use real estate as a wealth preservation tool. And today we got my good friend Chrispyman on today, who is deep in the crypto space, and we're going to talk about how we can use real estate as that wealth preservation when it comes time. So, and we got Chris on, who is from the group. He's a real estate entrepreneur. He's been doing a bunch of fix and flips, and he owns some apartment buildings, which is really cool. So we're going to be able to pick his brain a little bit, and kind of what we want to do is merge these worlds together, guys, and that's a goal throughout this wealth building journey. So, Chrispyman, thank you so much for being on with me today. Dane will be running a little bit late, but yeah, man, welcome, brother.
Hey, thanks, Corey. I appreciate it. Nice to meet you, Chris.
You too.
Looking forward to hearing about some real estate deals. I thought the reason that that Dane wasn't here is because he's off chasing the launch, right? Pulsechain launch. And he's doing it. Is that what he's doing? He's busy.
Hey, contractor right now, so yeah, he's gonna hop on here in a second.
All right. So hey, I'll throw this at you, and maybe you guys cue this up. So yeah, a lot of us are in crypto. A lot of us have been delaying gratification for a long time, and at some point, maybe this cycle, next cycle, ready to exit with some capital. So, if that's the plan, right? Some people want to stay, but if they're going to pull out, what do you do with it? Where do you put it?
Right. So, I mean, ideally, real estate is going to be the optimal time, in my opinion. And let me see if I can pull this chart up, because this really drives it home. I feel like real estate will be at a bottoming when crypto is going to be at its next market cycle top. And so if we could time this just right, here it is. Let me know.
So you're thinking end of 24, 25?
Yeah, so let me share my screen. Oh, why can't this work? Window, entire tab.
Just the seed phrases, man. Just put those up. That's it.
Right. Let's see if this works. Can you see this?
Yep.
So right here, this is a great chart that shows home price / median income ratio. This was the 2006 housing bubble when I don't know if you watched the movie The Big Short. It's a real good description of what happened back then, and you can see, we ended up crashing. This is like a matter of years, though. Real estate is a very slow moving asset class, and it takes a while for it to really bottom out. And you can see right now, this is where we're currently at. And you can see it's kind of rolled over the top. And I project, maybe 24, Q4 of 24, or even early 25. It doesn't mean that we're going to see that a bottom, we're going to go down as far back in 2008 to 2011. But we are definitely at some kind of market top, and we're going to see some kind of, downward pressure from all this interest rate hiking, and the pricing hasn't caught up. Like I was telling you in the green room, here in Phoenix, we're 60% down, offered a contract year over year on the MLS, meaning that the pricing hasn't caught up yet to the demand. The demand is dropping significantly, and pricing hasn't quite caught up. So, being that real estate moves so slow and crypto, let me stop screen share, moves so fast that we really could see an optimal timing with 2025 being the next market top for crypto, and we could take money off the table and start parking it into some real estate stuff, which would be really cool. So, yeah, man, the key is there's two different ways you can kind of do this, right? One, you can go out there and find the deals yourself. And there's a lot of ways, there's a lot of guys out there who teach how to do this. One of my favorite mentors in the real estate space is like Sean Terry, and he teaches you how to go out there and get direct to seller and find these deals yourself. And now this is creating a second job for yourself. Like, this is what we did the last 8 years, right? Was was binding deals, going direct to the homeowner and negotiating direct to the homeowner. What you want to do is you want to find homeowners who are in distress, and then you go and you offer them cash for their house or a cash for maybe their apartment building or mobile home park or whatever it may be, and you target them. So that'd be the one way, the first way you could do it. Now that this is, like I said, you're creating a second job for yourself, and you're going to have to go through all the headaches of creating a business, right, Chris? I'm
100%.
It's a whole nother animal now. Or you could find good high level operators to park your money with, and those guys are going to go out there and find the good deals. Those guys are going to go out there and basically do all the hard work for you, and then you could park your money with them in some kind of syndication or a raise if it's a security, right? And Chris, don't you have right now a raise that you're doing for an apartment building? Maybe touch on that a little bit and how that looks like. So, like, if say we fast forward, Chrispyman wanted to take some money off the table from the cryptocurrency market and roll into your apartment raise that you got going on right now. How would that look?
Yeah, so it's pretty straightforward. Currently, we're syndicating deal by deal. So, Corey, you touched on a fund, right? So you have funds and you have straight syndications. A fund's just a big group of people raising money, and they can invest in a bunch of different things. We're syndicating strictly deal by deal. So we're actually on our second syndication right now. We've done a bunch
right
of
there. That doesn't have to be a security, right? When you're syndicating deal by deal, does that have to go through the SEC or no?
If it's a syndication, yes.
It still has to go through the SEC if it's a syndication.
Correct.
Okay.
Yeah. So when you get into that structure, it's a security. If you don't want to do that structure, you could always do a joint venture and other partnerships like that. But when you get,
did we lose them?
Ooh, hold on, someone just called me.
Okay.
Yeah. So the way it works really is we go out, we do all the hard work, right? We're the general partner. We're the main people. We go out and find the deal, do all the hard work. And then we bring in a bunch of limited partners like, Chrispyman and some other folks who are, doing well, and they just want to invest passively. Right. So what they do is they invest their money with us into the deal. Not only do they invest in us as the operator, they invest in the deal. And then you sit back and collect checks every single quarter on the deal. And then when we decide to sell it, refi, whatever that looks like year after year, we underwrite the deals. Year after year, we make a decision whether to keep, sell, refi. Either way, you have a capital event, and that's where you double up your money.
And he gets all the tax benefits of owning real estate too. Isn't that correct?
Correct. Yep. So you're an equity owner in the property. So you get the tax benefits. And over the next 4 years, next 4 years, we still have cost segregation going on. And
break that down for him, because not everyone knows what cost segregation is.
Yeah, I'm not familiar with that. What is cross segregation?
So cost segregation. So a property, the way a property is depreciated is there's two different ones. There's 39 years for commercial, and then you have 27.5 years for everything under that. And that's year after year after year. It slowly depreciates, and you could take the tax benefits, right? That's how it's always been traditionally. When Trump came into office, he passed a bill called this cost segregation, where you could take all of the depreciation in year one.
Okay.
So you would go out, you would hire a company, a cost seg company. They would come out and they would do a full valuation of the property. And then they would come back to you and say, all right, here's your full depreciation, which for a couple of years was 100%, which was just phenomenal. I mean, we were getting like 60, 70% depreciation for our taxes. It was unbelievable. But starting this year, it went down to 80%. Next year, it goes down to 60. Next year, it goes down to 40, and so on. And then in 2027, it ends, unless some new administration comes in and decides to adjust it, fix it, keep it around, which would be amazing. So
we have 24. We have the opportunity for that to happen.
80%. Right. Yeah, exactly. So this year it's 80%. It's still extremely high. And so we're on a mission just to get people to invest now so they can take advantage of the highest cost seg they can get their hands on. which is a big deal, right? For high earners, especially. I mean, that's all they're looking for is what do I buy to get these tax write-offs?
Mm-hmm.
And so apartments are one of the best things to purchase long term for sure. And then now for the cost seg. So yeah, it's really, really great. And now is the time to do it.
And so after that law is fully phased out, will there still be depreciation just at the old rate? Is that what's going to be happening, or no depreciation at all?
There's pretty much going to be none after that because you're taking well, you're 20% of it. You'll have 20% that'll trickle out, so you can only take the 80% this year, right? So it's going to keep going down every year. So you'll have a little bit.
Got it. Well, right before Trump came in, though, right? That's how it was, wasn't it? The 20% per year.
Yep.
Yeah.
So it's going
correct.
back.
Okay. Yep. And then next year it'll be it's basically going to trickle back to what it was originally.
Got it.
So talk about Chris. Like I know you got a raise right now. Don't you have a raise for a 76 unit or something like that in Tucson?
Correct. Yeah.
Currently,
yep.
Talk about like what that looks like. Give us some numbers. If like say Chrispyman was like, hey, hypothetically, I want to give you a couple 100,000, and what does that look like? What could he expect as far as returns? And just break it down for us.
Sure. Yeah, I can give you like a rough breakdown. This is a 506B structure, and so I can talk about the deal, but I can't go too crazy talking about it. I can't talk about guaranteed things. It's a friends and family raise, so I just have to put that out there. But yes, we have a 77 unit B class property down in Tucson. Awesome property. To be just in layman's terms, it's a double digit return, right? So say you invest 50K. Right now we're conservatively underwriting it at 1.9, but we know it's going to do better. So you're basically doubling your money. So you put 100K in, you're getting 190 back or 200K over the length of the ownership, and then the tax benefits, of course. I could get into the detailed numbers like IRR, ARR, cash on cash, all of that, but in the end, it's a double-digit return. So that's what we always tell people. I don't get too in the weeds with all the underwriting statistics and numbers and everything, because a lot of people are like, I don't even know what that is. But yeah, so that's really how it works.
Well, the alternative to a deal like that, or even doing your own real estate, right? So if you get capital out of it doesn't matter where it came from, whether it's crypto or somewhere else, right? All assuming it's legal, right?
Of course.
So you get this capital out, right? You got to do something with it, and so I put it in a bank account, I guess, and then watch it, but it's not going to grow, right? And then if I go stock market with it, maybe there's a few people out there that think that you can rely on 9 or 10%, but I don't know, generally 7, 8%.
Generally 5, 6.
Yeah. Well, I don't know what you look at. I only invest in good deals. So
yeah. Overall, statistically, that's what they say. Right?
Yeah. From the statistics, so you're not wrong about that. I mean, lots of times with my stock investments, 4%, and then if I'm talking to my broker, I end up, they pitch one or another dividend stock. The dividends are 8%, but it's on a declining price share. Or share price, and so it's pretty funny when that happens. So my perception of real estate. I mean, these are my words, not yours. Not pretend your deal, but my perception. If I purchase real estate and I rent it, and particularly if I did, cash kind of a deal, then I should be able to probably exceed 17-18% easy. That would be my impression. I guess it always depends on the deal, right?
Yeah. So on these apartment deals, we have something called the IRR, which I'm not sure if you're familiar with. That's the internal rate of return. It's basically the cash, the time value of cash in a deal. It's the overall number of the
That's
deal.
Your yield, Chrispyman. We'll make
Correct.
it in crypto terms. That's your yield.
That's your yield, right? And so on these deals, it's typically between 15 to 17%. So it's a pretty solid return overall on your investment.
Yeah. Yep. That's the kind of range I was thinking about.
Yeah.
And this
yeah.
Well, come on, for most people it is, isn't it?
That's great for real estate and for just parking your money somewhere to take some tax benefits, and then you're earning some passive income and not having to do anything, right? And so like it's just a great way to store wealth. And so
definitely.
So we got Rob on. Rob, what's going on, brother?
Hey, how are you? Can you hear me?
Yeah, we can. Thanks for joining us this morning.
Yeah, sorry, I'm driving, but I wanted to hop on.
Absolutely, man. Talk a little about what you got going on. You got some syndications going on. You got some raises going on.
No, I've never done anything like that. Actually, Ronnie, who just joined the group, he's my partner on a deal. We just closed on 96 units in it's like south of Nashville.
Nice.
So that we seller financed it. But that's my Ronnie and I have done a lot of deals in residential, like flipping and wholesaling. But this is our first foray into the multifamily space. So we closed on that at the end of December. So
exciting. And that was all seller financing. You didn't have to raise no money for that.
No, we had to put about 300 down, and we closed it ourselves and didn't raise any money. So now we're in the process of getting a bank loan for the rehab on it, but it's about 95% occupied.
Oh wow,
that's sweet.
That's really good.
Only 300 down.
Yeah,
that's fantastic. Yeah, it's really good.
Yeah, but that's what we're working on now. So just, I guess, sort of faking it till you make it kind of thing. We've never bought anything of this size. So
yeah, that is totally it, man. And are you planning on continuing to go after bigger type deals like this, apartments, commercial? I mean, eventually you're going to probably have to start doing syndications and raises if you continue to rinse and repeat, right?
Yeah, I'd like to get into that. I've never done a syndication or anything, but yeah, I have a residential wholesaling company, easyoffer.com, and we're turning a lot of the marketing into for multifamily commercial in Tennessee, the Carolinas, and Florida. So we're looking for multifamily storage, and commercial assets like that. So that's where we're heading.
Cool. I love it.
Yep.
Oh yeah.
Very nice. Well, when you guys hear somebody coming in, usually somebody new into real estate, right? A lot of us are giving the advice, hey, go put your money in the market, right? And you say, well, I'm interested in real estate, and then they point you at a REIT. So why would you want to go after getting into syndication deal and I get that it's sort of like a REIT, but it's not exactly, right? Because it's not something that's out there. What's the difference between that and doing a syndication deal?
Yeah, well, REITs are tied to the market, right? To the actual market. Like once you open up a REIT, you're tied to the market, and so you're basically doing stocks, right? So with a syndication, it's the complete opposite. A syndication is solely designed, well, the way we do them is solely designed to purchase a property specifically. And so you're not tied to the market, you're tied to an asset, a tangible asset that you can control, you can do all of the things with, right? We can decide what we want to do. Obviously, we can't decide on the real estate market in general, but we can do whatever we want with that deal to make that thing rock and roll. And with a REIT, you can't do that.
Refinancing, the investor gets the benefits of that. If you go to sell the property and there's equity, the investor gets the benefits of that. A REIT just shares that you're buying on the market of a company, if I'm not mistaken.
Of course. That's exactly what it is. And that's about 6-8% if you're lucky. And then there's no tax benefits there. It's actually works against you on a REIT. So, they're good to get in and park some money. I don't say anything too bad about them. There's just better options, way better.
If you know operators, operators, or if you're the one getting the deals, there's way better opportunities than investing in a REIT. REIT is made for retail. It's made for just the average Joe to invest in like I said, in shares. There's no tax benefits. You're going to receive between 6 and 8%. Where like Chris was saying, he's on his deal, he's going to be getting about 17%.
This deal is going to be about 15 and a half, but
15 and a half,
that's
good.
Yeah. And again, fully conservatively underwritten for sure. That's the only way we do it. But yeah, you can expect between 15 and 17%. When you start before when the market was screaming hot, 2-3 years ago, you were seeing 18 to 20% IRRs on some of these deals, which was just a little outrageous, right? We all knew it was a little crazy and had to come down a little. So yeah, you're definitely seeing between 15 and 17% on most of these deals now.
Yep. I'm investing right now in and I've been investing in this project down. It's south of Atlanta, Georgia. It's not a commercial or apartment, but it's a new development, and they're paying me 20%. And I know you were familiar with those guys, right, Chris?
Yeah, Rob.
Yeah, Rob.
Yeah.
And those guys.
Yeah.
It's 20%. They're doing well. They're building rent to own. Is what it is, or something like that, and then they're selling it. They've already had it sold to a hedge fund, but those guys do good work.
Yep, they do. He's another good group to be around. That deal's very specific that you're in, but most of what he does is 100K minimum investment, 12% return. That's just standard.
Talk about that, because a lot of people probably in our audience are going to be like, okay, what do I need to invest? What does it look like to get in these kind of deals? Talk about that for a second.
Yeah, I mean, first of all, you just got to know the right people. I mean, like REITs and all these other things, you could just go to an investment, person, broker, all those things, and they'll tell you about that stuff. But a lot of those guys don't have access to me, Rob, right? The other Rob that we're talking about, like the guys that are in the streets, like getting after it. Not doing these billion dollar deals, but doing million dollar deals, right? Yeah. And they're fantastic projects to invest in. So yeah, like with Rob's different. He has two different arms. He has his normal investment side where you just give him $100,000, $200,000, and he just puts it to work on different projects, and he just gives you a steady 12% return, which is fantastic.
So it's like a loan.
Yeah, it's like a private money loan, right?
It's basically a private money loan.
Right. You're basically a PML for him, and you're giving him money. And then this other deal, again, this one with the 20%, that's kind of not a one-off. I'm sure Rob will do multiple deals like that, but that's one of those deals like he's developing, right? So you're getting in for the lowest price you really can to build it. It's better than buying a value add a lot of the times.
Hey, let me bother you guys to go back to that, because I think this is really interesting, and I think it'd be helpful to the audience. Talk about knowing somebody. So usually, right? You say, well, you got to know somebody. Everybody goes, I don't know anybody. But let's dig into that a little bit further, because I don't. So I've been able to watch this firsthand, right? Because one of my kids is doing real estate, and God help, maybe he'll beat me, right? And so here's the thing, though, right? He works it, and there's like incredibly stupid deals that you just wouldn't expect come up, like and. Anyways, I'd like to hear you guys talk about that, because it occurs to me that if somebody isn't out doing the work, trying to figure out where there's a deal, they don't come. And that's the whole thing about quote unquote knowing somebody. Either you got to be doing the work, or you got to know somebody who's doing the work. It's not something to be afraid of,
Exactly. Oh yeah. Exactly. Now, doing the work yourself, that takes some real grit, and it's, getting in the weeds. I mean, I built a company up where I had like $100,000 a month overhead from doing the work, right? Spending money on PPC marketing, going direct to seller. I had a team where I had a bunch of sales agents here in my office negotiating the deals from the seller on my behalf. And so it was a business that I scaled out, and so that way I could continue to wholesale, fix and flip. And you can hold some of those properties too, because you're buying these at deep discounted equity. So, you could build the company out yourself, or you could do it yourself, or you can, if you know people in the industry who are doing it, who need to raise money, then in my opinion, now that's the way to go, is find the Chris's, find the Robs, get those guys who are really good at creating deals, who know how to go after these homeowners or commercial property owners, and who know how to negotiate directly from the seller. and invest in those guys.
Well, what does that look like, Chris, when you guys are out looking for a deal? What does that look like? I mean, I guess most people probably listening to this aren't like their first stop isn't going to be I want to get into necessarily a syndication with 39, 500 apartments or something, but just in general, maybe closer to home to what they're doing. How do you, what do you look for in deals?
God, I mean, obviously we're looking for a deal.
Yeah,
we're looking for something under market, first of all. Me, I mean, Chris, Rob, and Corey, we're all in the same business. Our primary business is wholesaling, right? Fixing and flipping and finding off-market, deeply discounted properties. That's our goal, right? You're always looking for a deal. Everything's in the buy, right? Same with crypto, same with all the things. So it's all about the buy.
Well, what's that saying? You make your money on the buy.
Make your money on the buy. Yeah, it's all about the buy, for sure. So, and for someone who's just getting going, ultimately, like your son, I don't know what type of real estate he's in, but you got to just do your research and decide, look up all the types of different real estate there is, and just study a little bit of each one of them, and then decide, well, shit, this is probably a good fit for me, or this is probably a good fit. Like when I got into wholesaling 8 years ago, I was the guy came from a bartending background. Corey was in casinos. Like him and I were basically the same guy.
Mm-hmm.
And I was like, I found wholesaling randomly, and I'm like, okay, I could do real estate without a license, and I could get real grimy in the streets and do like guerrilla warfare stuff. I was like, this is what I'm into. I'm not the guy like the suit and tie realtor. That's just not who I am. And so I fell in love with that, right? And then over the years, I fell in love with more things. Now we're in apartments. So I think that's how you do it. You say, hey, I want to get into real estate. What kind of real estate? There's so many different avenues. You just got to decide.
Oh, sure. Yeah. In my kid's case, he does multifamily and several family homes. So he's been doing that. But so what I've been exposed to, because I'm asking the question because I think it's interesting. I think other people will be interested in it too. Most people probably approach buying real estate as if they were the ones buying it for the first time for the house that they're going to live in, or the second time. As they get all emotionally involved with, I can't ask the price, this and that. But honestly, people go in, and once you get a little bit of more practice at it, you first off, to offer, usually this last market recently has been weird, but usually you're offering less than what they're asking, or you figure out pretty quick that what they're asking is probably pretty low when you make an offer pretty quick. But I've heard of, and I've seen some other people make some crazy deals, usually having to do with the seller being super motivated for some reason, whatever that motivation is,
Yeah, that's what we're chasing, motivation.
Yep. And you could target that motivation and find, there's lists you can pull. For example, you can go to a city and find out who is got liens on their property because maybe they didn't take care of the yard for the last 6 months, something to that nature. And you can pull that data directly from the county, find out who has those liens. That is a indicator of distress. So they should have probably some kind of motivation in their life, and you can call that homeowner and directly call that homeowner and ask how much they want for the property. You can do the same thing if they're homeowners in pre-foreclosure.
Yep.
If they got a foreclosure coming up, you could pull that data and you could call that homeowner direct and be like, hey, look, I see you're in foreclosure. I'll give you X, Y, and Z. I will even help you move. I'll help you could help fix their problem that they're going through at that time, to get that property off their plate and onto your plate at a discount. And so there's many different strategies of doing that. So, yeah. Rob, I don't know if you wanted to chime in on that a little bit.
Yeah, it's funny. I started my wholesaling company in beginning of 2020. And in Nashville, especially, market just kept going up and up. But most of the deals I have done over the last couple years have not been motivated sellers for whatever reason. Tennessee's a little bit of a weird market, but most of the deals we have done, seller gives us a price and we're able to move it for over what they're asking. Probably in the last 8 months or so since June. Well, I guess it's been almost a year now since we've seen a bit of a slowdown in the market. We're definitely seeing like a lot more motivation out there. But yeah, so it's within the last year, it's been sort of a different business for us. So
Yep.
Sweet.
Sorry, guys, got lost on the phone. Someone calling me, kicking me
I'll be a
off.
homeowner, right?
It actually was. It's from my website.
Water heater.
No, motivated seller, hopefully.
Oh yeah. That type of
I'm
water.
hoping. Yeah.
So what about people coming out of crypto? Some of them might have enough cash or capital coming out of crypto to make cash offers, cash or loans. What's if they're going after properties individually, that is, right? Not with the syndication. What do you think?
Man, I would, depending how heavy they're coming out, I'd be doing all of it.
Yeah, I know,
I'd be,
right?
I mean, I would. What do they say? 7 out of 10 most richest people in the world got truly rich from real estate over time, right? And so when you come out with that cash, I mean, you just want to start parking it. You really want to park it passively, unless you want to start going in full time doing real estate.
Oh yeah.
Which people don't.
But if you're gonna go make try to make deals, find deals, and buy, cash offers or financing, what do you think?
Oh, cash offers for sure.
Yeah.
Financing
offers, but if you're going to plan on stacking the portfolio, you're going to want to get leverage. You're going to want to get financing, whether you're getting seller financed, which Rob was talking about earlier, that deal he locked up, the seller is carrying the note. They're the bank. And so he's paying the seller off the note. And so you if you're going to build a portfolio, you do want to use leverage, because that's how you're able to build out a massive portfolio and make the most passive income.
Right. Well, my thought was initially to try to come out with maybe 300K and find a deal. And then once I secured the deal, assume it's going to be a rental, right? Because I'm not wholesaling or anything, right? So I would turn that into fully occupied, and then go take money back from the bank, and get it financed or whatever I could,
Yes.
and then roll that forward with whatever I have left over for cash.
Yeah.
And in a market like we're up here, it's you can still find houses for around 300. Maybe sometimes a little bit less when you do a lot of work, but 300 after you're fixing them and everything, maybe 275. I guess it all depends on what's necessary.
Yep. Yeah, you could do the burst strategy on that if you wanted. Buy, renovate, rent, refi, redo. I always forget exactly the flow, but yeah, the burst strategy. So you're just going in, buying a property as cheap as you can, ideally. Get the thing cleaned up, get a renter in there. 6 months later, pull a refi on it, right?
And rinse, repeat.
Yeah, exactly. Now, honestly, in this market, it's with the rates, it's terrible. I just refied a duplex and got 7.8% on it. Terrible, but it still covers the debt service, covers it. The rent coming in, I still make about $800 a month on that thing. So, obviously, you want to make sure that what you're buying, you want to crunch those numbers right up front with rates today. And potentially what they could be in 6 months, which we have no clue, right? But you want to underwrite it for today, maybe put a buffer in for an extra 0.5%, 25 bips or whatever. And make sure that when you buy that thing and you get it going, that rent, when you get that renter in there, that still covers the interest rate that you're going to refi into. And the goal is to make $400. Our goal, company-wise, is to make $400 profit on every single rental. That's our ultimate goal. Now we'll take haircuts on that. We'll make 300, 350, but that's where you want to be, because then you got your oh shit fund stacking up as well, in case things happen to it.
The key, Chrispyman, is really knowing your numbers, right? When you're playing this game,
always.
Especially if you're going to be the operator, finding the deals, building your own portfolio out. Really knowing your numbers, diving in. What is the market doing? Where's it going? Where's it been? And that is the key. Unless you're wanting to find the high level operators to invest in, which for me now, moving forward, when I pull my money out in 2024 and 25, I'm going to be finding the Chris's. I'm going to be finding the Robs. You know, we have our group. We have a lot of real estate entrepreneurs in our group that I'll be just placing my money with them. You know, I'm like, Chris, you can get me 17%, bro, or even 15.5%. I'm good with that. Here, park it, give me my tax benefits, and let's move on, right? And that's really what I want to do for me moving forward now, instead of building out the infrastructure of going after those deals, because you really do have to build out a beast to find the deep discounted deals, and especially if you want to find a lot of them, right? If you really want to go after and build a massive portfolio.
Right.
Hey, well, hey, so Chris, let me ask you this, because you'll have a good answer for this, I'm sure. So I don't know you, just met you on stream, right? And so you're not my brother. Somebody wrote that.
Somebody put that in the chat. Someone's like, "Is Chrispyman's brother?"
Hey, who knows? Stranger things happen.
Hey.
But here's the thing, right? So Corey's got tons of experience. He's able to judge, right? So, you know, because right, I mean, anytime you go into business with anybody, no matter what the deal is, because you're really talking about going to business, right? Whether it's a contract or however you got to structure stuff, right, with a deal.
Mhm.
So you got to have enough knowledge to be able to do that. So what do people need to learn about first to be able to pick people, to pick the right people to go with? What do they need to know?
Yeah. Really, if you're starting to like learn about syndications or just investing in multifamily, again, it really comes back to starting to search online, right? Everything's there. Say, hey, I want to invest in an apartment complex. The second you type that in, all of the things are going to pop up. Syndications, joint ventures, all of that stuff should pop up. When you're looking into how a syndication works or structures, you want to find operators, right? That's a big one. You want to learn about guys like myself, and I can get on the phone with these people. This is what I do every day, every other day, is I'm talking, especially with this new deal we have. I'm just constantly talking to people and explaining what it is, what the process looks like.
Right.
And I think that's the best way. I mean, YouTube's got it all. You could find everything on YouTube, right? Just type in multifamily syndication, and you got endless videos explaining it. But until you know who the operator is and learn what they're all about, because listen, you're investing in the deal, right? For sure. You want a great property, but you're really investing in the operator.
Yes.
That's who you're investing in. You're investing in our team to bring this deal to the finish line. It's not going to do it itself, right? The deal's not going to do it itself. It's us who's going to do it. And so you really want to be with a solid operator who understands what they're doing, who has plans to grow, vision of growing and getting better and better. I think that's the biggest thing for sure.
And doing your due diligence on that operator, Chrispyman, to figure out what has he done in the past. It's very similar to like how Richard Hart, right? We love Richard Hart because he's got a track record. He's got a very successful track record with Hex. And so like I feel very confident in investing rather a large amount of money into Pulsechain. And that's one of the confidence that I get from Richard Hart, is that he does have that track record. It's just no different and finding and picking a good real estate operator is, what has he done in the past? Where's he been? Where's he going? You know, what do the numbers look like on his previous deals that he's done? And really diving in, and you know, there's enough research and due diligence you could do on these guys to really figure out if they're going to be the right fit for you. And I've invested in a lot of great guys. I've even invested with some guys who were kind of iffy. I have one investment right now. It's like a syndication, but it wasn't on real estate. It was on oil and gas. They were drilling for oil and gas, and I'm cash flowing out of it, but it was not nearly the promises they sold me in the beginning of that journey. And I didn't do enough due diligence in the beginning to know that he was a younger go-getter operator with not much track record. But I'm doing okay in that venture regardless, and I'm happy about it, but still. So knowing your operator is critical, and investing, and like you said, Chris, in the person, not just the deal. The deal's great. Like, we got the asset, we were backed up by the asset, but who am I investing in? It's very, very important. And that's why you got to be careful with some of the gurus that are out there, who are bringing deals to the public. And I won't mention names on here, but we had one I think it was what's his name? X-Ray Vision. I went to a guru kind of like event, and then like he invested in that operator, and he, they didn't really do much with his money. I mean, he's now, I think, coming to fruition. He's getting a little bit of return on his money, but there's you got to be careful with the really big guys because they're more focused on holding events and selling coaching and selling the dream than actually being an operator. You want the operator. You don't want the guy who's out there, trying to sell the dream. So, we got someone else joining us today. Here we go. Alexander, can you hear me?
Yep, I can hear you.
Awesome. How you doing, my friend?
Doing all right. How are you?
I am doing amazing, man. What you tell the audience a little about yourself, what you do, and yeah, man, join the conversation. Give us some thoughts.
My name is Xander. I work with Rob Norris at Easy Offer.
Oh, cool.
Nice.
So I didn't know about this meeting. He just sent it.
We lost him.
Probably got a phone call.
Yeah, getting a phone call. I work with Rob, and I handle many of the hats that he doesn't wear anymore. I do our training with our guys that we have. I work with our acquisition agents, looking at deals, sending deals out, and then I do all the web-based stuff like all of our leads and deal flow and everything like that. So,
oh, well, that's awesome. You're the integrator.
Yeah, I guess that's the integration.
Integrator / COO. Yeah, Rob's probably the visionary.
Yep.
It's critical for every company to operate. You need to have both or recognize who wears those hats.
Yeah.
Mm-hmm.
So.
Yeah. I was going to touch on something else on that too with the operators. You definitely want to look at operators too that are vested in the deal.
Oh, yeah.
That's a big one. So, you do have guys out there that are raising some of these big deals and, they're not investing in the deal at all. We invest in every single deal.
That's right. Skin in the game matters, right?
Right. Yeah. And for us too, as general partners, and potentially a limited partner as well, it's big for us, right? Because then we can double dip. We can invest in both sides of it. And we're obviously extremely confident in the deal. So we're going to do that. These deals are a lot of work, a lot of work, and it's like, we want to get in on both sides if we can. So I think that's a big one as well, right? Operator, what they're up to, track record, and if they believe in the deal, if they're putting their money in it.
Yeah, I love that. And the problem is, Chrispyman, you won't find those guys on the public, right? Out there holding these big events, and the ones who you see all over, YouTube or Twitter, or we even have one where I guess his brother is now, talking with a lot of the Hexicans, but yeah, so you don't find those guys. You really have to. It's kind of like who you know to find these guys, really. So the good news is you guys know us, so we can help introduce you and facilitate many operators if you're wanting to go that route. And then you basically interview with them and you talk to them and like I said once before, once again, you're investing in them, right? And who's the operator that makes you feel warm and fuzzy? Just how Richard Hart makes me warm and fuzzy. I'm going to invest in anything Richard Hart does. It's the same thing with these guys.
Mm-hmm. Yep.
Got it. Yeah.
Well, cool, guys. I mean, this has been fun so far. Chrispyman, any more questions you think you got for these guys, these real estate guys?
No, I think I'm getting a grip on it. I think my path, I'll tell you what I'm thinking. Right?
Yeah.
I don't want to manage people, probably. Right?
Definitely.
I say it that way because you know how it is, right? You say that and then you end up doing something. But I'm not interested in being the on-call guy, to go fix everybody's toilet, right? And so I'm not interested in that level of engagement. But I could see myself kind of going towards a deal and then, trying to find somebody like you guys are calling them operators, Now, luckily I have something like that in my own family a little bit, but I'd probably head in that kind of direction. And so then I just need to make sure I vet, like you're saying, right? Vet and do my own due diligence on the operator before I got into a deal. Because of course, any investment's a risk, right?
Of
With
course.
anybody,
Definitely.
because you never know. But I mean, I would be looking for past performance, experience level. Do they have skin in the game? You know, because I've seen some funny stuff happen, right? When people don't have skin in the game, they
Yeah.
just get up and walk away.
And I
That's
will
Yeah.
say,
sorry.
I will say this, Chrispyman, that's the only way to make real estate passive. The whole ideology that real estate's a passive income asset class is a lie. If you're the operator, if you're the one building out the portfolio, if you're the one that's just boots on the ground, dealing with the contractors, dealing with all the BS that's behind the scenes, people don't know what's really behind and the work involved of being an operator. There's no such thing as passive income in real estate unless you're investing in that operator and you're just sitting back and you're truly the guy who's just collecting the checks by being by investing in a syndication or a fund or even a REIT, like you had said earlier. That is obviously a passive income play, but I think it's probably one of the worst options you can get into when you're investing into real estate. So we got Dane. He made it on. I think he was dealing with the contractor, not being passive.
Oh man, dealing with contractor, it always takes longer than anticipated. I'm sorry I'm late, guys.
Not being passive in real estate.
No, it is
Nope.
not.
Mm-mm.
Well, hey, the regressive. Maybe I don't know if that's the right way to say this. Hey, I'll regress towards why am I even talking about this with you guys, right? So clearly, I believe in crypto.
Yes.
Otherwise, it wouldn't be here.
As we do all here too.
clearly, I believe in. Clearly, I believe the gains can be better there, subject to volatility and risk, and all that stuff. But nobody, none of the people I have to pay bills to yet, except crypto. And so I've got to figure out how do I weather volatility in crypto while being 80% in crypto, 90% in crypto, which means I've got to have some sort of funds outside of crypto, at least to some level, right? I mean, I know there's some purists who scream up and down that all should be in crypto, but again, I can't. I got to pay my tax bills. So how am I paying that? They're not taking crypto. Well, anyways, that gets me all the way back to I got to figure out what I'm going to have outside of crypto, and where's it going to be, and where is the best place to put that, and that's why we're having this conversation. From my perspective, right?
Yeah.
Right.
And the timing's perfect, man. I keep saying it over and over again. I'm gonna keep saying it. As we're going through this journey, using crypto right now as a wealth creation tool that we're not a better place and better time in the market with the absolute, the economy getting wrecked, with the process of real estate kind of coming down into its bear market, with the presidential election upon us, with the Bitcoin halving upon us, with Pulsechain about to launch upon us. This is the opportune time to invest in crypto and use it as a wealth creation tool. And then when it comes time to take profits, to roll those profits in and use real estate as a wealth preservation tool.
Yeah, I'm with you there, man.
Mhm.
I just wish more people did that. I know a lot of people get wrecked a lot of times, and I just really wish more people would at least peel something off and do that. Because I think that unfortunately with the crypto mindset, right, it's very much casino like, and I've done it too. Where you all of a sudden, it's stupid. Money that you would have in your hand, you wouldn't tip somebody, but it's okay if you just go throw it away on something that's not going to work, right?
Right.
Like, I've got $1,000 in my wallet, so let me throw $250 at anti-Pepe coin or something, Pepto
Pepe's
Bismol
little
coin.
brother or something.
Yeah, whatever, right? I mean, it's just so easy for us to do that, but if people had a plan on how to patriate some of this money, some of this capital, and get it invested in something that's going to last for them long term, I think it's a good thing.
It's critical, and you should, and like you said, have a plan, write it out, strategize and
paper.
Start thinking about, you got to think about the future, what you're going to do, not just treat crypto like a casino and hope for the 10,000. Well, then what's next? What's next? What's next after your 10,000x? What happens if it only happens 100x happens? You need to have strategies and plans for everything. So
yeah.
Yep. And I'll tell you, passively investing in real estate, specific types of real estate, is just the best way. And then and if that operator, like what we're going to try to do is do what's called the refi and roll strategy, where you buy a deal, you rock that thing out, you get it stabilized, and then when you decide to refinance it, or when you're coming up on potentially refinancing it, we're actively looking for another deal, right? We got the team just going crazy talking to brokers, because we want to turn around and refi that deal, do a cash out, and then try to roll out that cash out, all those funds, right into the next deal. And so someone who, that's a tax-free rollover, right?
Mm-hmm.
And if we can accomplish it, that's massive, because, say you put that 100,000 in, we do that cash out refi, you're getting back 190 grand. If you want to hang out with us and stay in the next deal and just stay on the journey, then you're putting 190 grand into that deal, not 100, right? And so every deal, you just keep trickling. The next thing, you double. Next thing you know, you're putting $1 million into the next deal, after 10 years. And you're just rocking and rolling. You're just passively just sitting there. Next time, Bitcoin decides to do the next halving or the next thing, right? You're already making 30 grand a month. It's not a big deal. You're not sitting around betting on that, hoping it's the big payoff, right? You're already doing well. So yeah, if we can do the refi and roll strategy, that is our ultimate goal. It's tough to time, right? 1031s and all of that are just, they're a pain in the ass, but
1031, guys, by the way, is when you're rolling money out of one real estate deal into another, and that's a tax-free event, because you're just taking money from one asset to go into the next asset. It's got to be in the same asset class, from my understanding. I'm not a accountant, but if you're going from one asset to another, then you're able to not pay capital gains on that.
Yeah, it's got to be like kind, is what they say.
Like kind from a 1031 roll. Yep. So
yeah, and so that you keep doing what you're doing. You let that operator do what they're doing, and years go by, and next thing you know, your returns are just amazing. So I tell people all the time, like, your first deal is not going to change your life, right? It's not going to be. It's going to be the next couple deals that you get into. But you're not the one doing the deals, so you're not stressing about it. You're still doing your normal life and grinding and stacking more money up to get into the next one. Next, you're in 5-6 deals.
Yeah, Chrispyman, think about it. When 2025 comes, are you going to want to leave all your money in crypto? Like, that's probably the time to take all this off the table. And then what? You leave it in the bank? No. Well, where do you put it? You put it with some of these guys,
and some of it, right? You don't got to put all of it, of course.
But yeah, and you could
we'll
put
take
it
all.
Multiple different operators, so that way you're diversified and multiple different deals. And I really feel like that is the play this next market cycle for legacy wealth.
Yep.
Well, what if you did want to leave it all in crypto? What would you do with it?
Well, then you experience the 75 to 95% correction.
Yeah.
Or
stable farm, you go do some of that other stuff. Yeah.
I bring it up, right? We have some examples, and there's some people in the chat talking about some different stuff like this too. That's why I made the point about it's not about whether you believe in crypto. I suppose here's one situation, right? There's one situation where we all own so much of a specific crypto that even if it goes down 90%, you can live off of it. That would be one situation.
Yeah.
But it's probably pretty unlikely, right? That everybody can do that. Some people can. If I had bought hundreds of thousands of dollars worth of Ethereum at 50 cents, okay, good. I could do that, but that's not the situation. So then I guess the next best thing is, exit, right? We saw somebody do this or something, right? OA exited to what? Stables. Where's all that? Is all that Bitcoin out there? Did it all go down 50, 60%? No. Where is it? Stables. Okay.
Right.
Well, again, if you got enough of everything, then you really don't care too much about, you care about the risk, but it's a different level of risk. But what's the problem? What's the problem with me keeping money in USDC? Well, I don't know. Maybe something bad happens to USDC. Well, you almost saw that, right?
circle.
And then you got counterparty risk. So it starts driving you back towards, well, maybe you go to USD, right? Even if I did that, I'm on exchange by now, right? Now I'm on exchange, and do I really want to leave cash on Coinbase? Probably not.
Yeah.
Probably not, right? So then I'm going to bring the cash back to, and so we're right back to the beginning where if there is something that you need to protect for whatever reason that can't be subject, or you can't let it be subject to volatility, you got to get it somewhere where you can manage it, and putting it in maybe real estate is one of the best answers, right? Or maybe it's the best answer. I don't know. But
I think so.
people
And
decide.
now Dane said you can leave some of it in stables and yield farm, like with the whole liquid loan strategy or the Pulsex with Power City with the Earn protocol.
Yeah.
You know, you could do stuff like that with your stables. But you know, it's when the market comes back, when we have our next crypto bear market, I think the ideal strategy is to be diversified through all of it, including putting some stuff into real estate. Real estate's always an asset class. It's never going to go away. Someone needs to live somewhere, right? And it's always going to be there. It's a great store of wealth. You know, you're still beating inflation typically when you're investing in real estate. You're getting cash flow, yield. We all love yield. That's what. and real estate's probably one of the best asset classes, you know, that you can get yield outside of crypto. I think. You know,
and for a lot of people, it's going to come down to, well, do you want to give the government $500,000 or $1 million, or do you want to buy real estate with that $500,000? Like that's what's going to come down to for a lot of people. Would you rather buy assets for yourself, or would you rather give your money away to the government? And so you've got to make a determination there on how you want to do that and what you want to do. And I know the answer for me. So
yeah, I know. I think I understand what you're saying, but can you drive a little bit further into that? Because I think this is what I hear you, what I hear you saying. Assuming I'm not worried about year-end deadlines at the moment, but I'm hearing you say if I can pull the capital out of crypto, and I make the decision to go into real estate, and the buy gets done within the time frame, I then have tax savings that I can take just from depreciation in the same year.
Yeah, and I'll give you an example from my own life. And of course, you know, anybody watching, we're not CPAs. This isn't financial advice.
We're just dudes on the internet.
Yeah, go talk to your own CPA, do your own due diligence. Just because I've done these things or anybody on this show has done certain things doesn't mean it's the best thing for you. But for me, and I imagine just about all these guys on the show, it's pretty common that you get halfway through the year or near the end of the year. And, you know, let's say just for easy math's sake, I made $1 million. There's lots of other write-offs and things I could utilize, but let's just stick with $1 million for really easy math's sake and say I have no write-offs. Well, at that point, I'm going to go pay about 40% in taxes, if I'm not mistaken. So $400,000 gone, I'm going to give that away to the government. Well, for me, since I'm designated in certain ways because of my real estate background and my real estate investment strategy, just about every dollar that I go and I put into crypto, I essentially can depreciate about 30% of that money away. And so the math works out where if I had $1 million, you know, and I was going to be taxed $400,000, well, I could go and I could, you know, I essentially need to buy 3 times what my taxable burden is for me. Now, once again, you got to talk to your CPA because it's a little bit different for everybody. If you're not a real estate professional for tax purposes, then this is going to be different for you. I am, so I get a little bit more bonus there when I go and cost segregate properties. Once again, I'm probably giving you a lot of jargon and terminology you may not be familiar with. That's all right. But long story short, for me, the way the math worked, I need to go buy about 3 times the amount that I needed to write off during the year. And so if I had, you know, $400,000, then I need to go write off, and 4 times 3, I need to go buy about $1.2 million of real estate during the year. And if I can go lever that properly, I mean, essentially it's going to be, you know, 70 to 80% loan to value that I can lever that. So, you know, what is that? 1.2 million. Let's call it 70%, you know, so I've got to bring 30% to the table. That's going to be what? My brain isn't working great this morning.
It's that contractor, bro.
360,000. So the down payment is going to be almost the same as what I would give away to the government in tax or in my tax bill. I could take that same amount, turn around, put a down payment on properties, build an asset, or buy an asset and have this thing that I've built. So rather than giving that 400 grand away to the government, I could take 360,000 of it, use that as down payment, 70% loan to value, and buy property.
Got it.
Does that make sense?
Great example.
Yeah, that was good.
Great example.
And then once you move to Puerto Rico, you'll need even less of a write-off.
Right. When we're looking forward to that.
You're investing in the real estate because you just want to invest in the real estate. You're not really investing for the tax purposes anymore. Yeah.
Very good.
Yep.
Just because you want to put it somewhere besides your bank account. I don't ever want to keep money in my bank account. Anytime I see the money kind of building up in my bank account, it makes me nervous. I'm like, I'd rather have it in crypto. Like, I honestly would rather have it in crypto than have it in my bank account. So,
and the numbers in that example, like I said, it's going to come down to be a little bit different for everybody. If you don't qualify as a real estate professional, then maybe you get half the incentives or something like that. And you don't, I think it's kind of like it's like a point of pride in real estate to be able to do the math and buy it in such a way where you're like, oh, I didn't have a tax bill this year. And it is for a lot of real estate people. You don't have to get it to where you have zero taxable income, right? Like, it's all right to pay a little still. You're just trying to find this balance for you. And I can speak from experience. I bet a lot of these guys would agree. There's a lot of people that go and lever themselves too heavily in the name of paying no taxes, and then they shoot themselves in the foot the next year or the next few years. And so, like, there's a balance here and a stride to be able to, a cadence to find for yourself. And so, like anything, I think it's wise to start out, relatively conservative, get your feet under you. I think I talked about this on shows past, but I had a buddy that went and did some real estate deals with me in another, or with some partners that I had. He went and did his own deals with them in another market. And I said, hey, like, there's no guarantees of how these guys will operate. And so, like, do a deal or two before you really go balls to the walls here. He did the opposite of what I suggested. He went and bought way too many units. And they didn't perform like we had hoped. So I left myself in a good position because I said, hey, I'll do one deal with you and let's see how it goes. And it didn't go as well as I'd hoped. So I left a little bit of money on the table, but I was able to get out. Whereas he's sitting on, he's got to bring another $500,000 in rehab, finish that portfolio out. They don't want to buy him out because it needs a ton of work still. And I'm like, you left yourself vulnerable. So there's a balance to everything.
Got it.
Mm-hmm. Again, the operator.
Yeah, operator is everything.
I'm hoping to have this problem.
We all do. And you guys probably already talked about it a little bit on the show, but I know that we've talked a number of times here where we think there's a decent chance that as crypto is topping out, real estate may be bottoming. One contrarian view, I was talking to one of my other buddies the other day, and his opinion, and I love your guys' insights on this, his opinion was that, as soon as the government's, the Fed starts dropping the federal funds rate, that we theoretically may see cheaper interest rates across the board in real estate. The demand seems really strong right now, at least in my market and other markets that I've talked with people at. Demand seems to be picking up here in the spring. Now, there's certainly some outliers like office building and things of that nature. They operate a little bit differently. But he's like, Dane, I think real estate's really bullish right now because if federal funds rate comes down, I think interest rates on real estate come down and we're back off to the races, kind of like we were a few years ago with demand high, interest rates going down, and we might see another like blow off top, if you will, in real estate over the next couple of years. Love your guys' insights on that.
I don't think he's taking into account the crash that happens every time after the Fed pivots. If you look at every single time historically when the Fed pivots, the whole economy comes to a screeching halt and crashes. People lose their jobs, just in general. The S&P 500 makes its all-time low again, and that happens after the Fed pivots. And so that's when we really see max pain. We're not seeing anything close to that in real estate. Nothing is even caught up yet. So a lot of people are still thinking real estate is bullish, and maybe it is for the time being. But I don't foresee that. And that's why real estate is always a lagging indicator. And that's why I think it's 24, 25. We really see when the pain's going to be here in real estate. And so that's my opinion, is that he's just not factoring in that after every single time the Fed makes a pivot, that's when we see max pain. And we're not even close to that yet.
Yeah. And, another thing too is inventory is low, like everywhere. It might seem like it's high. You might still see like 20,000 listings, 15,000 listings like in Phoenix, but half of those aren't affordable, right? So they're just chilling. They're not doing anything. Right. It's still, inventory is a big deal. And so here in Phoenix, I know, Corey, I don't know if you've been paying attention. Like, I know you're doing a little bit less real estate here, but I'm hearing about bidding wars. I'm hearing about people still having bidding wars. Yeah, like I'm hearing these things, right? And so it's picked back up. I think people have just been like, well, rates are 7.5%. It is what it is. If I'm buying a house, I'm buying a house. It's not going to be the house I wanted, but I'm buying a house.
Employment's still on an all-time low. The economy is still rolling, as on as normal. There's still a lot of liquidity in the market from the last money printing. The Fed has not sucked out all the liquidity that they want to suck out. They haven't offset the balance sheet the way they want to yet. It's not there yet, not even close. And so they're going to keep working on doing that, Do
you think they're going to be able to suck enough of it out to really, for the rest of us?
I think they're going to raise the debt ceiling, and they're going to make other adjustments to try to make an excuse for what they do, right?
Just kick the can down the road some more, yeah.
It's all they do, man, and they just want to wreck us some more, right? And that's how they suck away our wealth slowly. It's crypto's the one place that we can put our money that doesn't happen. That's why I love crypto. But it'll be interesting to see, and I could be totally wrong, man. But I mean, I was showing this chart, and this is before you hopped on, Dane. I'll show it one more time, just so you.
Because I think historically, once the Fed pivots, the economy pulls back. But historically, I don't think real estate is impacted very heavily. This 2008, deal is an outlier, and so that's where I'm hopeful. I would love to see a nice big real estate pullback when crypto's topping out. It'd be the trade of a lifetime.
Yeah. You can see this chart, right?
Yep.
Yeah. This is the 2006 housing bubble. This is where we're at right now. Nothing goes up forever. I don't care what it is. And now I'm not saying we got to do this. I'm not. But there's going to be something. So, we'll see. It'll be interesting to see.
It's going to be interesting, yeah.
I think it could be. I think it's spell opportunity for us crypto guys, though. I really do. If we play our cards right, this could be the play of a lifetime.
Well, even if real estate doesn't pull back, like let's say that it just continues an upward trajectory for the next 5 years, the gains that we theoretically could see in crypto compared to the small amount of appreciation that we could see comparatively in real estate over the next couple of years is still the trade of a lifetime. If your goal is to get into real estate, to have that as part of your wealth creation or your wealth preservation plan. And man, now they're out there, but almost every wealthy person I know has some real estate in some respect.
Yeah, because that's how they preserve their wealth.
Yep, exactly.
They park their money there. Yeah, it's a great way to do it. I'm going to be looking for all the Chris and Robs in the world when it comes my time. I don't want to be the operator, and I've made that very clear. I've done the operator. I've dabbled with that. I don't ever want to do it again. I want to find the Chris's and Robs.
Yes.
And they earn their share of the pie by being the operator. They earn that money.
Yep.
Agreed.
It's work.
Well, cool.
I came a little late. Is that a good place to wrap it up? I don't want to cut things off. You guys are rolling.
Man, I just want to make sure that we've kind of covered everything with you. Is there any other burning questions that you might have for us or these guys here, these gentlemen? Yeah, man, this has been awesome.
No, I don't have anything yet.
We'll have you back on again. I like continuing this conversation once in a while. This is like our second or third show where we've done this. And especially as we're moving along in the market and we see crypto kind of doing its thing, it's good to revisit this and really touch on what we're going to do with this money that we're going to be receiving out of crypto. Like we need to have a plan, and that is critical to have a plan in place. And for us, this is part of our plan. So we want to make sure that we're educating our audience, and hopefully, some of these other crypto guys in our audience in here that are commenting, they also have some pretty large bags probably coming out in 2024 and 25. And it's good to have a good plan in place. So we'll be revisiting the conversation multiple times. I know we had Cuthberto on here one time. He was a blast. He's another high-level operator who owns like 3,000 units. And who was your other friend, Dane, that we had from the group? It was
Clay.
Yeah. He's another high-level operator. And so, yeah, it's going to be fun.
Yeah, definitely. Yeah, and if anybody wants to connect with me outside of this, obviously I know there's a lot of guys in the Telegram and all of that. If they ever want to connect outside of this, hit me up, shoot me a message.
Do you have a Twitter, Chris? Because a lot of these guys are Twitter focused, right?
Oh,
like you're crypto guys. So if you want them to connect with you, Twitter or Telegram would be the best. You went dark.
And while he's finding his stuff, Rob or Xander, if you guys want to, feel free to shout out your contact info if you want to share that. If not, that's fine as well. Feel free to do so.
Yeah, I'll put it on here.
Yeah, I'll throw mine in the comments here.
Perfect. Yeah, feel free to share, whether it be email, it doesn't necessarily have to be Twitter, but if it's email or a different social platform, feel free to post those in the comments. And you guys, we do our best to bring value to the crypto community, to our real estate guys in general. Feel free to reach out to these guys. It's an opportunity to network, all that type of stuff.
Yep. And Chrispyman, do you want to go ahead and shill where everyone can find you? And even shill Hexfire.io, man, which is I think my favorite site.
I know it's my favorite site.
Oh, it is fire.
So if you're so you can head over to hexfire.io, which is it's a data site for Hex and soon to be Pulse. Once we get rolling, you can contact me there or here on YouTube at Hexfire.io on YouTube, and also Twitter, Hexfire.io.
Excellent. Hold on one second. Let me just put these. Those posted in the private chat. Let me put them in the public so that everybody can see them. Let me grab this one really quick. Cool. All right.
The only reason I'm even on Twitter is because of you guys. So I'm not on there.
And YouTube. That's where crypto lives.
Yeah. I'm learning.
Yep. So I just posted everybody's ats or emails that we've got here in the chat. Feel free to reach out to those guys. And let me grab this one too really quick. Otherwise, we appreciate everybody being on. This is a good place to kind of sign off.
This was fun. Yeah,
good stream. Thanks.
Revisit, as we're moving along. It's been a blast. So.
Thanks, guys. Appreciate it.
Yeah. Good to meet all you guys.
See you guys.
See ya.
See you later.